Well, when looking at the Norwegian economy, which of course is the most important part for us to look at, even though we're not isolated from the rest of the world, we are seeing that the monetary policy is starting to have an effect on the economy overall. We're seeing that the inflationary pressure is coming down, looking at the last few numbers, both in terms of core inflation, but also overall inflation. When looking at the households, we are seeing that consumption is coming down, but that's also natural, bearing in mind that in Norway, more than 90% of our mortgage loan book is on floating rates. So the monetary policy has more of a direct impact. Having said that, we're still seeing that the consumption is holding up at as normalized levels, I would say, and that people are still, we are not seeing a negative trend in terms of development in our portfolio, credit portfolio, and people are generally doing okay from a Norwegian perspective. Unemployment remains very low at 1.9%, and even though that's expected to start to come up, it's expected to be at historically fairly low levels also going forward, and which is of course important also.
Any thoughts about the delinquency side of the ledger as well? Third quarter impairment of loans and guarantees coming at 937 Norwegian kroner a million, that is. Under control for sure, but in terms of the rate of change here, Ida, anything worrying for you to look at?
If you look at the personal customer segment, which accounts for more than 50% of our loan book, the customer, we aren't seeing a negative trend there. We're seeing a slight increase in terms of installment holidays, but now we're more at the levels that we saw pre-pandemic. Of course, that is increasing, and that will is also expected to continue to increase, but again at low levels, and where the customers are overall doing fine. And also looking at the Norwegian economy and pointing to unemployment, that's of course an important factor to continue to monitor closely. If you look at the corporate customer side, the impairments we're taking this quarter is related to customer-specific situations that we've followed for a very long time and kind of have been developing for a period. We're not seeing any systemic or kind of systematic changes in the portfolio, and overall the corporate customers are also doing fine. We're also not seeing a negative trend in terms of additional drawings on liquidity facilities that would be an early indicator. But of course, those sectors that are more exposed to increased interest rates as well as decreased consumption are more vulnerable in situations that we move in today. Those account for a fairly limited part of our portfolio and therefore wouldn't really cause a concern from our perspective. But of course, we are following the development from an impairment perspective very closely. And commercial real estate has been a hot topic for Europe overall and the Nordics. But in Norway, we haven't seen a negative trend there either. But of course, that's an area that are more exposed to higher interest rate for longer.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.